Welcome back to Explain the Charts, everyone. Today, September 12th, 2025, we're putting Ethereum, ticker ETHUSD, under the microscope to break down its recent movements and the powerful narratives driving them. The crypto world is buzzing with excitement, especially around Ethereum ETFs, and for good reason. Ethereum's spot market share has surprisingly surpassed Bitcoin's, hitting 32.9% recently. This is a major milestone, accompanied by August spot volume hitting an impressive $480 billion, outperforming Bitcoin by a significant margin. Institutional confidence is clearly on the rise. For example, BitMine expanded its Ethereum investment by $200 million, bringing its total ETH holdings to over $9 billion. Analysts are already eyeing an ambitious target of $6,800 for ETH in Q4 of this year, a prediction heavily reliant on sustained investor sentiment and broader economic stability. Beyond ETFs, the macroeconomic environment offers a tailwind, with softer-than-expected U.S. inflation numbers boosting hopes for a Federal Reserve rate cut, which generally bodes well for risk assets like cryptocurrencies. Regulatory landscapes are also evolving, with Japan significantly cutting its crypto tax rates to foster Web3 innovation, while the U.S. SEC continues discussions on a unified regulatory framework. However, it's not all rainbows and unicorns. Some short-term metrics suggest that Ethereum, despite its recent strength, could be due for a deeper correction in the immediate future. Adding to the dynamic landscape, new GameFi projects like Roblox, built on Ethereum, are emerging as breakout stories, with its token RBLK seeing a massive 580% pre-sale surge and a predicted 100x return, highlighting the vitality of the Ethereum ecosystem itself. Now, let's turn our attention to the charts to see how these fundamental and sentiment-driven factors are translating into price action. Looking at the one-day chart spanning from April 2024 to today, September 12th, 2025, we observe a generally bullish trend with periods of extreme volatility. Notice the significant surge in May 2024, particularly around May 20th, with a remarkable 19.2% single-day gain, which likely correlated with early ETF enthusiasm or institutional accumulation waves. This move propelled ETHUSD from the low 3,000s to nearly $3,700. Fast forward to early August 2024, and we see a sharp reversal, with a major daily candle on August 5th showing a near 10% drop, pushing the price down to around $1,911. This period aligns perfectly with the deeper correction in the immediate future narrative we discussed from the news summaries, demonstrating how quickly market sentiment can shift. This level, around $1,900 to $2,000, established itself as a critical long-term support zone, a bounce point that proved resilient. From that August 2024 low, Ethereum staged a strong recovery, slowly grinding upwards with a mix of green and red candles, eventually breaking past the $4,000 mark in December 2024. The price then consolidated, moving between approximately $3,000 and $3,800 through late 2024 and early 2025, indicating a strong battle between buyers and sellers around these psychologically important levels. More recently, in August 2025, we witnessed another powerful rally, with ETHUSD climbing from around $3,400 to highs near $4,800. This sustained uptrend reflects the growing bullish sentiment fueled by the ETF inflows and overall positive crypto market momentum mentioned in the news. Let's zoom into the one-hour chart to observe the more granular price movements from late August 2025 to today. We can see that after reaching highs around $4,850 in late August, ETHUSD experienced a brief pullback, finding strong support around the $4,300 level. This $4,300 to $4,400 range has acted as a significant short-term support zone over the past few weeks, preventing further downside after larger daily corrections. The candles show consistent buying interest whenever the price approaches this area, forming a solid base for potential upward moves. Notice the relatively stable trading around the 4,300 to 4,400 range through much of early September, demonstrating a consolidation phase after the strong August rally. Now let's narrow our focus even further to the 15-minute chart, specifically looking at the early hours of September 11th, 2025, between midnight UTC and 11:45 Universal Time Coordinated. Here, we can see intense intraday trading activity, with price fluctuating within a tighter band, generally between $4,340 and $4,470. Notice the sharp upward movement around 12:30 Universal Time Coordinated on September 11th, where the price surged from approximately $4,340 to nearly $4,480 in just a few 15-minute candles, indicating strong buying pressure during that period. This rapid ascent, followed by a quick retrace and consolidation, is typical of highly liquid assets like Ethereum, where significant orders can temporarily shift market dynamics. The current price action on the 15-minute chart shows a continuous battle to maintain upward momentum, with minor pullbacks quickly absorbed by buyers, suggesting underlying strength despite the volatility. Returning to the daily chart for a broader perspective, we can identify key price levels to watch. The immediate short-term support lies around the $4,300 to $4,400 range, which has proven robust in recent weeks. A breach of this level could see ETHUSD retesting the prior support around $4,000, and if that doesn't hold, the $3,500 level from earlier 2025 would become crucial. On the upside, immediate resistance is found at the recent highs of approximately $4,700 to $4,900. Breaking convincingly above this range would pave the way for a retest of the psychological $5,000 mark, aligning with some of the bullish predictions discussed earlier. The ultimate long-term resistance, based on current bullish sentiment and analyst predictions, would be the $6,800 target for Q4 2025, requiring substantial and sustained buying pressure. In terms of reasons to be bullish, the growing institutional interest and ETF inflows are undeniable catalysts, as seen with Bitmain's significant investment. Ethereum's increasing market dominance over Bitcoin in spot trading volume also highlights its fundamental strength and network adoption. The prospect of Federal Reserve rate cuts could inject more liquidity into risk assets, benefiting ETHUSD in the medium term. However, reasons to be bearish in the short term include the potential for regulatory headwinds, as a unified framework from the SEC could introduce stricter compliance requirements that may dampen market enthusiasm. Additionally, the short-term correction signals mentioned in the news suggest that minor pullbacks are always a possibility in such a volatile market. To recap, important price levels to monitor include the immediate support at $4,300 to $4,400, major support at $3,500 to $4,000, and resistance at $4,700 to $4,900. An unbiased prediction for the short term suggests continued consolidation around the $4,300 to $4,500 range, with a 60% likelihood, especially if macro news remains neutral and ETF flows normalize slightly. For the medium term, a push towards $5,000 has a 55% likelihood, reinforced if ETF approvals continue and broader market sentiment remains strong. The long-term target of $6,800 by Q4 2025 carries a 45% likelihood, contingent on sustained institutional adoption, strong DeFi growth, and a favorable regulatory environment. Traders should closely watch for news on upcoming ETF developments, inflation data, and any further updates on the SEC's regulatory framework. On the chart, look for sustained breaks above or below these key levels on higher volume to confirm trend changes, and pay attention to reactions at the $4,300 support level for potential entry points.